All right, welcome to today's live stream. I'm your host Jaden Sterling, founder of Sterling Stock Picker. Today is April 21st. All right, welcome to 20 today's live stream. I'm your host Jaden Sterling, founder of Sterling Stock Picker. And I hear myself. Okay, I'm on the live stream page here. And this is where you'll go to post any comments or ask any questions during the live stream. I'm happy to answer any questions that you have. There are two options for that. There is our chat stock forum, which is from the main menu. Click stock forum, ask your question here. I'm certainly happy to answer that. And then here is the live stream. All you do is go to our homepage, scroll down, click join live stream, and voila, up pops the live stream, which I'm in right now. You can ask any question you'd like, and I'm certainly happy to answer them. But let's talk about what is going on with the falling US dollar. I've been talking about this for a little bit now, and it continues to fall. That's nothing new. We're seeing a very steady decline year to date. It is down 9% year to date and off 1.06% just today. So as the dollar declines, we need to look at what happens. On average, metals and mining, consumer financed, and transportation infrastructure were the best performing sectors in the 16 periods of dollar weakness going back to 2001. So metals and mining, precious metals, gold, silver, palladium, even copper had a huge run up already this year. It's since pulled back. But precious metals, very, very important. Fintech, I've not really seen perform that well. It had a great month in January, but fell off mid-February and hasn't recovered since. And, and then, of course, biotechs, banks, and healthcare technology were the worst performers. There's no question in our minds that the performance within the U.S. equity market during the recent period of dollar weakening is far different for very understandable reasons than the previous regimes where the dollar weakened by at least 5%. Hence, we can't say with confidence that just because something has not happened in the past, it can't happen this year. So we're looking at, and then the Dow leaders off, Apple down 8.5%. Gold prices have climbed to a record high. I really, really feel strongly that you got to have some part of your portfolio in gold, in silver. The ratio between gold and silver, gold has shot up, silver has kind of maintained its price, not a big mover this year. But I think that's going to reverse. I think you're going to start to see silver move up in price as well. So you can't go wrong. And when I mean gold, I mean gold coins. Here's gold, the actual physical gold coins, up almost 3% today. Year to date, up 31.79, and over the previous year, 43% move in gold. Unbelievable. So a really strong performer. So we know there is huge economic uncertainty. The Klaus Schwab of WEF, the World Economic Forum, is retiring. He's been in that position for 55 years. Frankly, that's going to lead to more uncertainty too. Who are they going to have in his place? What is the agenda going forward? It's going to affect all of us on some level, some way, but it's very interesting how it's sort of the changing of the guards, if you will, the announcement of the Pope's demise, passing, and Klaus Schwab leaving effective immediately. So this is going to just be, a sort of a changing of the guards, if you will, and it's going to be interesting to see who fills these major roles and, you know, their belief system, who they are, what has been their background. You know, we know in Canada, the prime minister was changed out recently to someone who is very much in alignment with Klaus Schwab, you know, wanting to take away our personal freedoms and things of that nature. So it's going to be fascinating who they put in this role, and that's going to be something to watch closely. Regardless of who makes that role, I'm really feeling strongly that you got to have a percentage of your portfolio hedged in something like this type of product. It's called ProShares Ultra Short QQQ. Ticker symbol is QID, trades on the US stock exchange. This is the type of asset that goes up as the NASDAQ goes down, and it's 2 to 1. So for every percentage point the NASDAQ drops, this goes up 2%. And I think it's just very, very important that you have some of this in your portfolio, especially if your portfolio is tech heavy, or, you know, if you're in any type of NASDAQ oriented funds, things of that nature, that you really got to have some investments that will go up if the market continues to drop. So that is my my number one pick in this type of market, is to really have your bases covered, portfolio covered in this type of volatile market. You know, it's not gonna always continue this level of decline that we've been seeing so far for February, March, and now well into April. It will stop at some point, but in the meantime, first of all, we don't know when that point is. You know, it just seems the U.S. politics is very volatile, very uncertain. And, you know, Trump calling Jerome Powell a loser. I mean, it's just, here it is. Stocks are getting hit again as Trump lashes out of the Fed and Powell. You know, it's just, you can't make this stuff up. And that, you know, the fact that the sitting U.S. president is wanting the head of the Federal Reserve to leave his role, when the Federal Reserve is not a government agency. The government cannot rule over the Federal Reserve. It is a private banking cartel owned by the wealthiest families in the world, and the U.S. president has zero say with the Fed. So now it's very interesting that we are seeing, it's kind of like we're, you know, peeling back away the layers here and seeing the real puppet masters at work. And those would be the ones that own the Federal Reserve. Those are the real puppet masters that are pulling all the strings of everything that is happening in our economy, and will continue to do so. And the U.S. president has zero power or say over what the Federal Reserve does. Now, if there is some type of movement, if there's an interest rate cut, you know, the Fed could intervene at any point and cut rates. Frankly, I think the Fed has been needing to cut rates, but that certainly would put more and more pressure on the US dollar. So they're between a real rock and a hard place. $10 trillion of short-term debt was floated just 4 years ago, and now that debt is coming due beginning of June. First of all, there's not enough money to pay off that debt, pay back that debt, nor is there even enough money to pay the interest on that debt. So you've got a situation where the government is absolutely broke. Tons of financial mismanagement happening. I mean, if you and I managed our investments in our life, financial life, the way the government does, we would all be absolute, you know, strapped and broke, and you know, we certainly wouldn't be an ongoing concern like the governments are around the world, who are broke and in debt. And so now we have a situation that we're seeing stagflation kick in, and stagflation is simply happens when inflation goes higher and gross domestic product GDP goes lower. And that's what we're seeing. The gross domestic product is in the negative territory. It's no longer positive. And So I think they're going to officially call this a recession that we've been finding ourselves in for a very long time. So I think we have inflation's here to stay, probably going to get worse, GDP declining, perfect environment for stagflation. And, we have to do our best to combat that. And how we can do that is buying gold and silver coins and investments like this pro shares, ultra short QID, and doing things like that and keeping some cash on hand to deploy, because at some point we're going to see some amazing equity prices that we haven't seen in a very long period of time. And we'll want to make sure that we can move that cash into the markets confidently. And it's always tricky because the hardest time to buy is when the markets pull back, when stocks go down, investors get more fearful rather than excited about, buying something on sale. So you're going to have to really do your best to stay level-headed during this time as I know it's no fun to watch all the red in your portfolio, but you could be selling covered calls against your positions. This is the ideal market to sell covered calls on your positions. To sell, you can even sell put contracts for any stocks that you'd want to take a position in. And then lastly, this QID, buying this long, so owning shares of this long, and you can even consider selling covered calls against it. They don't trade as frequently as some other companies, they have monthly contracts, but still you can continue to bring in money in a declining market, and that helps bolster a portfolio. All right, I hope this was helpful. And once again, welcome to all of our new subscribers. So many of you are new to our platform, and we're grateful for you. I think we're onboarding 20, 30 people a day now. It's just been phenomenal. So welcome to our platform. I look forward to seeing your posts on our platform, and I look forward to working with you. Have a fantastic week, everyone.